Okay, everybody, this is a third part. The second part was pretty short. Now I'm going to talk about the dollar. Before I was previously bearish on the dollar. I did call the top around the 88 area, and it's now trading at 85.58. Being that I am thinking that the market is potentially putting in a top now, I am thinking that the dollar is close to a near-term bottom here, and at the very least I'm looking for the market to at least pull back to that 18-day moving average, and the dollar should probably test the 18-day moving average also, which is 86.94 right now. And you can take a look at this chart. As you see here, we've had a very strong rally in the dollar from December of 2009, and we were at the 74 area, and we went up to 88, and now we pulled back to the 85 area, and as you see here, the stochastic has worked its way down into an oversold condition. We're pretty oversold right now. We're not embedded. Stochastic reading is 6 and 9, and the histogram is still ticking lower, so you still have some negative momentum, but you still have the MACD is still above zero. You have the negative cross, but the MACD is still staying above zero, which is bullish, and really you can't get extremely bearish on the market until the MACD does break down below the zero line. And it doesn't at this point. If you get an oversold bounce here, you could pull back up, and really, the trend of the dollar, the longer, well, the intermediate term trend is still in place. You haven't taken out any key support areas. If you drew a trend line from here, you could probably see that it would go somewhere in the 83 area. So it looks like the dollar may be putting in a short-term bottom. I mean, the last near-term break was in the 85 area, and it looks like we're kind of holding that area. And I was looking at the Euro chart, which I'm going to pull up. The reason why I'm focused on this is because when a dollar's typically bouncing, the market's been selling off, and it's a safe haven asset. And I was looking at the TLT, and that's also showing some bullish signs too. That's something to be aware about. And as you see, the euro's overbought. You get the MACD's crossover, and it's still below the zero. So it's basically just an oversold bounce. And where we stopped, well, we are above the 18-day here, which is the blue line. But as you see, there's a considerable amount of traffic in this 124 area, and the upper Bollinger Band is 125.55. So the rallies, it looks like it's just an oversold bounce at this point. The 45, you see it up here, is trending down hard, and the 100-day also, which is the green line. So it looks like you got an oversold bounce here, and now the dollar is oversold itself, and the euro is now overbought. And I would look for a possible resumption of the downtrend. So you want to be cautious here. My call on a potential market top here is there's nothing confirmed right now. What I will do for my SPY puts, I will look at that area where a 45 crosses 100, and if we close above that, maybe 1 or 2 sessions in a row, I would take out of my puts. But I don't see that happening. I think the market's going to come down, and I think it's going to come down early this week. But we'll see. It's a speculative call at this point, but you definitely you want to be careful. There's been a lot of bad data out there, and it's a very challenging environment. The economy is not doing well. I've been saying this for a while, and even the government numbers now are coming out, and they're basically saying that once you remove the $8,000 tax credit from the housing market, the housing market still has a ton of problems, and I don't think that's going to change anytime soon. There's still, people are in a lot of debt. There's record debt levels for governments and individuals, so it's a very challenging environment. Okay, so we looked at the euro there, we looked at the dollar, we looked at the VIX. Another indicator that you want to look at is the put call ratio. Right now it's at 0.88. It's not really excessive one way or the other. Basically, if it's over 1, that means there's more puts than calls. If it's below, then it's there's more calls than puts. So right now there's more calls than puts, but it's not excessive in either direction. The CPCE, that is the equity put call ratio. That's at 0.63, so that's kind of on the low side. Yeah.